GETCRACK. Wake up, motherfucker.
Yo, what's up? It is January 15th, 2025. So, we got soft CPI today, pretty good. So, all the trades are working out. Let's see what we got. And I see a lot of activity in the stocks I mentioned yesterday. Air, so after bad earnings, is popping up 12.75%. So, that's a good sign that hey, you could make another trade here. So hold off on these things. I don't know. These are just gambles, okay? NVTS, similar situation. You see that going up with semiconductors. Uh, Overnight in the morning for Thursday, tomorrow, very early in the morning, Taiwan time, we're going to have earnings for TSMC. So watch and see how that goes. We could have a nice 2-week pump from here. Okay, so you got NVTS, Air, AEHR. Okay, so I don't know if I want to play those. We have AAOI, another one I mentioned yesterday, same situation. You might get a quick pop, you might get a quick trade and then get out of there. Okay, I wouldn't rely on this to last more than a week or two. But let's see. Another one, NNOX, this Israeli X-ray company, sort of like a meme stock in its own right. Yeah, if you catch it at the right times, yeah, you could try to make a move here too. I don't know. I'm not sure if I want to recommend these things. Qubit, I think it had some news this morning of some contracts. So yeah, these quantum computing stocks still want to pump. So the stuff I mentioned yesterday, QUBT, QBTS, RGTI, IONQ. Yeah, if you're into trading, these are still you're still hot. These are way hot. Okay, let me put that in the list for you guys. Let me see what the space stocks are doing. And then after that, I'm going to have to do some scanning, see what we got new stocks picks for today, and then we'll go from there. Yeah, I'll have to do it like later today, maybe or tomorrow. See what happens. So these are like the quantum computing stocks. All right. Now let's see what else we got. Let's look at the QQQ right now. It's right at the resistance line. Perfect. So yeah, I probably would sell things right now because I sold stuff in the 30 minutes here, getting up to this point. SPY, yeah, you're gonna have to wait and see. I don't know. I don't know if we can drag everybody up. Bank earnings today were very good, but let's first look at MSTR. MSTR right at the point of resistance, 360. So if you were an MSTX, yeah, you can sell another chunk, or you can just sell all of it. Don't take the risk for the rest of the week. Come back later. I don't know if Bitcoin can actually get back to 103 and shoot above it into Friday. This might be it for now. We might have to wait a while, but yeah, you can come back tomorrow or overnight, see what happens there. Don't rush it. Another one, the utility stocks, California utilities up 8%. EIX, Edison International. So I think that will recover nicely for a trade. PCG, also a good trade. Yes, 6%. You could hold it if you want. Pacific Gas and Electric, because it's Northern California. There's not going to be anybody that will blame it for the Southern California fires. EIX, maybe they'll find out later something fell over, a power line fell over and created a fire, but I doubt it. So you could try and see if you can get this back up to 80. So if you got in with me, like around 57, 56, yeah, you could wait for 80. Good trade there. All right. Now, what's the other one to look at today? Oh yeah, the bank stocks I'll cover, and then I'll play a video after this. So this should be a short one, quick video, quick update. Okay. So let's look at the bank earnings, starting with J.P. Morgan. J.P. Morgan. Yeah, it had good earnings, but not really not really making a move. I think more importantly, what the CEO will say, Jamie Dimon, and then we have Citibank, C. Okay, that's doing a lot better, 6%, good. We have Wells Fargo, WFC, okay, up 5.76%. And then what's the other one? BlackRock and Goldman Sachs. Okay, my two favorite ones. Okay, Goldman Sachs. Yeah, I think they had good trading performance last year, so 5.87%. And BlackRock, your favorite banking stock, BlackRock, 5.7%. So not bad. All the banking sectors are up. So XLF, let's look at the whole financial sector recovering, up 2.2%. Very nice. That's very bullish. Okay, guys. So we have a break right now, but does that mean we're out of the woods? I have no clue as to that, but we shall see. So I'll play this video and let you decide. I have a bearish video for you. So I think you should always get things from both sides and then make your decision, make your strategies. I would say that as an investor, you're better off waiting and seeing what Jerome Powell says before we do anything. Okay. I think that's the best thing you can do. Okay. Let's play the video.
Hello, Happy New Year, and welcome to Stock Charts TV. I'm John Kosar of Asbury Research. Today I'm going to talk to you about what we see in terms of danger and opportunity as we look ahead through the first quarter of this new year. Today is January 13th. The title of today's presentation is "The Market is in the midst of a tactical correction right now and vulnerable to a deeper decline." First, let's take a minute just to review what we were looking at the last time that I was with you. That was on October the 8th of last year. And
Hold up, guys. Let me see if I can get the video going a little smoother. I'm not sure if you guys can see how smooth it's running or not. So let me just get this going. Okay. Okay, it's a lot smoother now. All right, let me fast forward.
sideways churning
Okay.
days in a month
Okay, let's go back. Skip ahead.
here. So here is the market is in the midst of a tactical correction right now and vulnerable to a deeper decline. First, let's take a minute just to review what we were looking at the last time that I was with you. That was on October the 8th of last year. And the first thing, and really the title that I had mentioned, let's go back and look at the S&P 500 here, is that there was a lot of risk reward opportunity as we saw it. And here's why. When I was with you the last time, we were right about here. So here we were sitting right on some support that we had been holding for a couple of weeks based on the July and August lows of last year and also the 21-day moving average, which is a monthly moving average. There's 21 business days in a month. It's an important average to us in terms of the research we do here at Asbury. So you can see not a lot of risk underneath this support and pretty much open-ended in terms of upside. The S&P rose by another 6% into the December 6th high. The next thing that we talked about was the NASDAQ Composite Index. That's the more broad of the two NASDAQs. Here's the comp here. And what we talked about was this big sideways churning pattern.
Yeah, it's not smooth. It's still not playing smoothly. So let me see. I have to go back. Let's see. Yeah. All right. All right. Okay. Let me try this again. Man, I definitely probably should get a new laptop with hella memory or something. Okay. Let's see.
We were the first thing, and really the title that I had mentioned. Let's go back and look at the S&P 500 here. Is that there was a lot of risk reward opportunity as we saw it, and here's why. When I was with you the last time, we were right about here. So here we were sitting right on some support that we had been holding for a couple of weeks based on the July and August lows of last year and also the 21-day moving average, which is a monthly moving average. There's 21 business days in a month. It's an important average to us in terms of the research we do here at Asbury. So you can see not a lot of risk underneath this support and pretty much open-ended in terms of upside. The S&P rose by another 6% into the December 6th high. The next thing that we talked about was the NASDAQ Composite Index. That's the more broad of the two NASDAQs. Here's the comp here. And what we talked about was this big sideways churning pattern. It's called a symmetrical triangle in terms of the chart pattern's name. We broke out of the pattern on September the 18th. I was with you right about here, so not too much higher than when we broke out. I said the upside target on this thing was 20,250. That would remain valid as long as we stayed up above the 50-day moving average, which is the blue line here. It didn't quite get to 20,250, but it got really close, within a couple hundred points, about middle of December, and after we had another 11% rise from October the 8th. The third one that we looked at was Alphabet. So here's Google here. The reason it was important to us, last year was driven largely by a handful of AI-related mega cap tech stocks. Google is one of them. So when I was with you, it was right about here. Here's October of last year. The reason I brought this one out is because we had this big support level here from going back to November of 2021. You can see we tested it again here as a resistance level in latter part, or actually early part of 2024. And then we tested it as support here in September, and we rose back up to the 200-day moving average. So I was with you here. There wasn't a lot of risk down here on this idea, an open-ended upside. So Google, since then, rose an additional 24% into the high that we made in the early part of December, early to middle part of December. So those were three keys from last time I was with you. A lot of these technical targets have been met now. So now let's take a look forward and see what I think we should be paying attention to through the first quarter and what we think is important. The first thing that's important to us right now is what's the internal health of the market. And for that, we go to our own Asbury 6. So here we are at asburyresearch.com. And by the way, if you have any questions about any of this, you can contact us right here through the contact tab. But let's go into the research center and let's go to the Asbury 6. And what we're going to see here is that there's a lot of red. And when the Asbury 6 is red, 4 or more of these 6 constituent indicators indicate a negative bias for the Asbury 6 itself, a bias for the model. So this turned 4 or more of these flipped to negative on December the 16th. That is right here on the chart. So you can see this is going back about a year, past 11 months. And green is when 4 or more of the Asbury 6 are positive or a green cell here. And the red is when 4 or more are negative. So we are negative. So we went positive on the Asbury 6 at the beginning of November, and we went to negative here. What does that mean? It means that the market internals that we have back tested as a set to tell us when the market is starting to lose its technical strength, its internal strength. We look at stuff like volatility, investor asset flows, breadth, relative performance between stocks and bonds, and a couple more in there too. They told us the market was starting to weaken internally. Why do we use this instead of just looking at the S&P 500? Because the S&P 500 isn't a really good day-to-day indication of what the market feels anymore. It's up 50 today, it's down 50 tomorrow. There's a lot of noise in the S&P 500. In order to bypass the noise, we are going back to a short list of back-tested tactical tools that have been very useful to me during my 40-year career in the markets.
All right, so you can watch the rest of that video on the description. And yes, so right now we are in a negative situation. I think the chart itself already looks bad. So I would agree with him, and I think for that to change, we're going to need more than a couple days of goodness. Because right now, you just see how the market's moving back and forth, back and forth, back and forth. No real commitment on either side. So we have to see what Powell says. And I think the Bank of Japan actually will actually say something before 1 week ahead, I believe. Let me check the calendar. Okay, let me check the calendar. Okay. Okie dokie. Let's see what the calendar says. So you can see like the core inflation this morning was 0.2, which was a little bit slightly better than what it was expected. Not too soft though. So I don't know if it really warrants anything, but I think this move is just because of options. A lot of people were short on Friday to Monday, and they did not get out. And I guess this is what happens. Tomorrow we'll have retail sales in the morning, 8:30 Eastern, 5:30 my time. And then let's see what we got. Yeah, nothing else for the US. So let's look at Japan. I think maybe next week Bank of Japan says something. Unless it's this week. I don't think it's this week. Blah blah blah. Inflation in Japan. Ah, yes. And the rate decision, 7 p.m. my time, 10 p.m. Eastern Thursday. So Thursday night we'll get Bank of Japan. So this might actually be a better better event next week than anything. Not sure. Let's go back to the US. I don't think anything next week is important, is there? No. No. Yeah. So yeah, next week is Bank of Japan then. I guess that's what I'm gonna wait for. That'll decide what the yen is gonna do, and that'll decide where everything else will be. So let me give you the link. You can go to the calendar itself. You can go look at the Japanese calendar or the US economic calendar. You can find everything. So I use Trading Economics website. Okay. So far, market's doing good, trades doing well. Everything I mentioned this week has paid off. Okay, let me go back and look at the chart again for you guys. Let's review anything else that we didn't cover. I think the QQQ is right there. It's trying to extend a little bit over, but I think that's it. Not sure how it's going to be tomorrow. We have TSM. So TSMC earnings overnight. Taiwanese time, early morning. I think probably 2 a.m. or something like that Eastern. I don't know. I forget. But it'll be late night or early morning. That's you'll find out right away. When pre-market opens, you'll find out right away what the market thinks. Or the futures. Look at the futures. And let me see what else. Oh, yeah. So if you did SOXX, yeah, you're doing pretty right now, okay? Or SMH, so semiconductors. Yeah, I don't know if it's going to go back to 260 for SMH. We'll see. after tomorrow. So if you're playing XOL, XOL is 3x leverage. Yeah, see if it can get back to 32 or something. So if you guys got in at 26, you guys can do that. That's a trade that you can make if you're in that one. So we'll see how that goes tomorrow, and then you'll get out tomorrow in the morning. And then Friday will be max pain. So the market might do something funny on Friday, and then we'll continue on next week. And remember, next week, Monday is closed for MLK Day. So you have to trade on Tuesday. So be aware, Tuesday could be funny too. If you have a long weekend, they could dump any kind of news. That's usually how it goes. Somebody will dump some kind of news over the long weekend to make the market do something on Tuesday, whether it's up or down, probably down. So if we're having a good week closing on Friday, then I would guess they'll try to shake people out on Tuesday. Then you jump back in and trade again. So especially with Bitcoin, right? Because Bitcoin is now teasing back at 100. Yeah, they could try to goof around there when there's low liquidity. When there's low liquidity, because as you can see, Bitcoin is just it's just basically following how the stock market opens and closes. Like all the major volume you see here, the spikes, and then everything's very quiet. Sunday, Saturday, up, and then every time futures open, right here, futures open, Sunday night, the futures market is open. It does something, crash right into market open, like normal hours at 9:30 Eastern, and then now it just shoots back up. It's just like, come on, yeah, you can't tell me that's 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 a coincidence. Okay, there's no such thing as coincidences. So be aware when the futures market opens. Futures market opens again, like actually even with MLK Day, futures market still opens, right? Sunday. So that will be around 6 p.m. Eastern Sunday. So even though there's a holiday, futures market should be open, I think. So double check me on that. I'm not sure. But you can see Bitcoin doing something funny in Monday. So watch that. And then you can decide how that goes. Because usually, like, yeah, Bitcoin will be a tell. It's a tell, right? This thing was dropping before like everybody else was dropping hard. Let me just prove that if that's right. So Friday and then Sunday. Yeah. So it was already dropping ahead of time on Sunday, and then yeah, everything else followed with it. Like so, you can see like the whole Nasdaq or S&P. Yeah, it's definitely follows the market. It definitely follows the market. So yeah, Bitcoin is no longer decoupled. It's heavily tied to what you see. So however Bitcoin moves, you can kind of anticipate maybe an hour or so ahead of time what the S&P is going to do or something like, or the Nasdaq. So you can look at the futures. Nasdaq mini is NQ, that's a symbol, and ES is for the S&P 500 mini futures contract. So you can watch that. And let's look at how Hong Kong is doing. Yeah. So pretty good, huh? I drew this like squiggly line way back when it did this, and it's kind of matching that. So I guess the next move is up, maybe until Trump says something in February. So once Trump gets inaugurated, maybe Trump will just say something and then crash it again. So yeah, China could be a very good, lucrative place to trade up and down. I'm just not sure exactly how I would time it at this moment, but I'll get back to you on that. Same thing with gold. Gold will follow that too, gold and silver. Tesla's still fighting at 17. That's good. It might make a run for it. See, January 29th. Damn, that's exactly the same time as Jerome Powell, right? Yeah, so I think Tesla and Microsoft will report earnings after Jerome Powell talks, after the close on Wednesday. Yeah, yep. Let's see, Netflix. Netflix is a kind of a downer, huh? They'll report next week on Tuesday. Yeah, it's been down. I don't know. Yeah, Netflix might be a lot more important this time around than usual. Have to see how that's going to determine consumer strength. I mean, right now Lululemon was saying like it was doing good. Like yeah, so far it's been hanging up here. since earnings last year, December 6th. So let's see. Yeah, I don't know. Ulta, yeah, Ulta is not doing that well. Let's see what Victoria's Secret. Oh, Victoria's Secret pulled back pretty hard, huh? Okay. I don't know. I don't know what the consumer will say. So tomorrow will be retail sales. So that the Lululemon and Victoria's Secret, yeah, all those Target, Amazon, Walmart, they'll have something. But overall, yeah, we have a recovery day today. Nothing much to say about that. I think that was expected, but we're not safe. Like you can see here, like stocks like these, like Gene DX, symbol WGS. You can see it's making a false breakout and then pulls back like this. That could be an easy breakdown, but so far we're ignoring it. Okay, Air is up 17%, NVTS same thing. So yeah, very juiced. Market can get very happy very quickly, and then it'll get sad very quickly too, and reverse the other way in no time. So I think Affirm, Upstart, same deal. Yeah, okay, still in that range area. Yeah, Upstart. Yeah, we're stuck in the middle. 50-50 chance, huh? No, yeah, none of these things look attractive to me. Honestly, like if you're an investor, you are not attracted. Same thing with Hims, right? Hims, the generic drug for Maker and also some other healthcare products. So yeah, this thing for the diet pills. Yes, it's just 50% right here. It's just halfway between these two lines. It's just stuck in that range. So I can't tell you anything at this point. There's no edge here for me to say. Okay, that's it. That's it there. Gold, nothing today. Gold, silver, nothing. Didn't really react strongly to that. The other thing was bonds. Yeah, it's trying today, but unless it gets back to 90, yeah, I wouldn't trust any of these moves. Okay, so let me play the rest of the video. I think that's it. See what else we got in that video, if there's anything else to say. And then I'll update you later today if I see something, or tomorrow morning, okay? When we get the S&P thing. Okay, let's push this ahead.
The market sees it as the just about 50 points below the market, 50, about 150 points below the market. We're at about 50, where are we? We're at 58.22 right now. So about 150 points below the market. Below that is a 200-day moving average. That's the major trend proxy that I don't think you can watch financial television for more than 5 minutes and not hear someone talk about it. The market sees it as the kind of where the trend is. So as long as we stay up above these supports, we are still in a bull market. We're still in a strategic bull market. But right now, we're in a correction. How do we know we're in a correction? Because our Asbury 6 has turned red, and also our CPM, which is our correction protection model, that is also risk off right now. So we have two indications right now that the market is vulnerable to further weakness. On the top side.
Okay, yeah, I don't think that's too much new information there. Okay, so I'll come back, see what you guys think, and we'll go from there. It's 30 minutes short presentation. You know what you got to do, okay? We have to worry about TSMC earnings in the morning. And then after that, Max Payne. All right, so go back to the last two videos. You'll understand. All right, see ya. Oh, yeah, and donate to Porsche. Yeah, please donate. Porsche J with an E. All right, Cash App, $, PORSHAJAYE. Because, you know, running this whole stuff takes money and time. And then anything else? No, I don't think I have any messages for you guys. So that's it.
Feel like I should feel like I should feel like I should feel like I should go. Feel like I should go. Feel like I should feel like I should feel like I should feel like I should go. Feel like I should go. like I should feel.